Hi, welcome back to the channel. Today we're talking about whether or not it makes sense to remortgage your property, to borrow more money to pay for building works. It's a big decision. Taking on debt should never be done lightly. It's something that you're going to have to repay at some point in the future, and increasing the amount that you've borrowed will also increase your repayments each month. So you need to make sure you've been through all of the numbers in detail and that you're happy that you're making the right decision and that it's something that you definitely want to do. But we're going to talk today about the market, what's going on in the property market, what's going on in the mortgage market, and then look at the reasons why you're considering doing your building work and whether that makes sense. And then we'll talk about how you go about achieving the best possible outcome for you. So let's get started. You may already have seen some of our videos talking about the market. If you haven't, there's a link here that you can click into that will take you to see some more detail on what we consider is happening right now in both property and mortgage markets. But to recap on where we are right now, currently the property market is very strong. Prices are rising, they're going up, and they are forecast to continue going up for the foreseeable future. So 2021 is expected to be a very strong year in house price growth. 2022 is likely to be similar. In the UK, we recently had some forecasts from Savills and Knight Frank, who are two of the biggest market commentators, and they are both saying that they think that the market is going to grow every single year for the next 5 years. They're seeing year-on-year growth, and they're expecting over 20% compound growth in the next 5 years. So that means, on average, your house is going to be worth 20% more than it is today in 5 years' time. So prices are rising, they're going up. So does that mean it's a good idea for you to think about spending some more money on your property, changing it, and borrowing some more money on mortgage? Well, possibly, because in a rising market, the benefit that everybody has is that the value of your property will go up. So whatever you do, the value is likely to go up. But if you spend your money wisely, if you do something really clever and add some genuine value, so you're adding value not just because the market's going up, but you've added some value by making changes, some additions, some extensions, then you could potentially benefit even more from a rising market because you've changed your house to become more attractive, to become bigger, to become that property that everybody's looking for, with multiple bedrooms and a big garden and a really nice layout and all the modern twists that everybody wants these days. If you can tick all of those boxes, then you could beat the market. You might be able to do even better than the market forecast. So in the UK, if it's 20%, maybe you could get 30% or 40% growth if you do the right things. So it's definitely a good time to be considering doing some building work to add value to your property, because in a rising market, you'll get the double impact. It will go up in value anyway, but if you do the right things and spend your money wisely, then you're likely to do even better than the market. So the market conditions are good in terms of property. In terms of the mortgage market, it's even better. So interest rates are currently at their lowest level they have ever been. In the UK and the US, we have never seen interest rates at this level before. It is a great time to borrow money. It is super cheap. Mortgages are the lowest they have ever been. So that is great news if you're thinking about taking on more debt, increasing the size of your mortgage. The rates you'll get right now are the best you'll ever get. So that's a really positive market condition for you to be looking at. And it's likely to continue. So in the UK, we're not expecting any interest rate rises in 2021 or 2022. And it's exactly the same in the US. Joe Biden is not expecting to increase the Fed rate anytime in the next 2 years. So we've got a prolonged period of low interest rates. And what that means is that you can get a very low fixed rate. So you can lock in a rate where you'll know for certain that that rate's not going to change for a defined period of time. And it might be 2 years, it might be 5 years, it could be up to 30 years if you're taking a very long-term view of your borrowing. So you can lock in a really great rate for a very long period if you want to. So all of those factors are really positive in terms of should you borrow more money and what's happening in the property market. It's a great time to borrow, and it's a great time to be in property because prices are rising. So if you've already got a property, it's going to go up in value. So that's great news. So we've established that now is a great time to be thinking about borrowing money to pay for that building work. So the next question is, why do you want to do the building work? And there's two factors involved in your decision-making process. The first factor is intrinsic value. Now, what do I mean by intrinsic value? Well, basically, that means the value that you'll create in your property that you'll be able to enjoy. So adding intrinsic value might be changing the layout, so taking out a wall and making a big open plan space. It might be adding an extension, so adding more ground floor space, creating a much bigger living environment. It might be adding a loft conversion, so adding more bedrooms or that master bedroom with an ensuite that you've been thinking about for a long time. Or it might just be some other things that you've been considering doing. And the intrinsic value is basically the enjoyment factor that you will get from those changes. So that's really on the happiness scale, it's going to change your life for the better. It's going to make you happier in your home. You've seen things in magazines, you've seen things your friends and family have been doing. You've been looking at your house thinking, why haven't I done this to my property yet? So if you're thinking about doing the building work for those reasons, then it's not just a financial decision. You're actually thinking about adding some genuine value to your life. And there's a lot to be said for that. And I think that's a really positive message for this video that, as I just said, it's a good time to borrow more money. And maybe it's the time to treat yourself, to make those changes, to do things to your property that's going to improve the quality of your life, to really improve how you live. So the intrinsic value is really important, but so is the financial value. And the second factor is exactly that. It's the financial implications of those changes. So you may be considering doing the work because you know there's some value you can add to your property, or you may be thinking that you want to do it just to sell it. So you don't want to sell now with the potential, you'd rather do the building work and then sell for a higher value. So if you're looking at this as a purely financial decision, there are some really important factors that you need to consider. And the first is the cost, and the second is the change of value, and the third is the saleability of your property. So they are all interrelated, but the first one, obviously the cost, you need to make sure that the cost of the work is proportionate to the value that you're adding to your property. So if you live in a high value area, so if you live in somewhere like London or New York, where property values are very high, then building work generally pays for itself very quickly. So it might be, let's take an example, if you're doing a loft conversion in London, now it might be that it costs you £50,000 for that loft conversion. Now, £50,000 is a lot of money, but if you've got a property that's valued at £500,000, £50,000 is not a great proportion of that value and will probably add 100 to 150,000 of additional value. So the 50,000 you invest, you might get double or treble your return on that. So the value you're adding is significantly greater than what you've spent. If you live somewhere where house prices are much lower, so if your house is only valued at £100,000, for example, then you need to really seriously consider whether adding a loft conversion is going to give you the financial return. And it's all about how much you can do it for and what value that will add to your property. So in this example, if you had a £100,000 house and it was going to cost you £50,000 to add a loft conversion, you would need to be very confident that your house was going to be worth more than £150,000 at the end of that process, because otherwise you're spending more money than the value you're adding. So it doesn't make sense. It might make sense from an intrinsic value, as we just discussed. It might make you happier. If you can afford it, you might still want to consider doing it. But from a financial point of view, you've got to do the calculations. You've got to look at the cost. You've got to look at the increase in your value and then decide whether or not you think it is worth spending that money to achieve the outcome. And in terms of how can you work out what your house would be worth once you've done it, there's some very easy ways of doing that. In your local area, find some properties that have already done similar things to what you're considering doing. So if it's a loft conversion, find another property that looks similar to yours, find one that's had a loft conversion done, and then find out what the value of that property is. If you go onto some of the websites such as Zoopla or Rightmove, you can find sold house prices. If you type sold house prices into Google, you'll be able to find the value of properties that have sold. Find some that are local to you, that look similar to what you're considering doing, and you'll be able to see exactly what value they sold for and how that compares to your property and what your value is today. And the difference should be the value of the loft conversion, for example. So if you can't do that, if you're in an area where that's not easy to do, call a local agent. So call your local estate agent or realtor, speak to them and say, okay, here's my house today. I'm thinking about making this change, to making this addition. What do you think the value is now? And what do you think the value would be if I went ahead and did that building work? And then you'll be able to see how much value is being added to the property by the work. And then you can establish whether or not that's more or less than the cost of the work to you. Generally speaking, the cost should always be less. My rule of thumb, I always like to make double my money. So if I'm spending £50,000 on some building work, I want to add at least 100,000 of value for that work. So I'm seeing for every pound I've spent, it's adding £2 of value. If it's closer to 1-to-1, so maybe you're spending 50,000 to add 50,000, then that doesn't really make sense economically. And then you need to think about the intrinsic value. How long are you going to live in that property? If it's for a long period, so if you're going to live in that house for 5 to 10 years, then you're going to get some real value from living there anyway. So it probably is still worth considering doing, even if the financials don't stack up. And also overlaid on top of that, you've got the market growth. So even if you only add the same amount of value, if you're going to live there for the next 5 years, then hopefully the market rises 5 years. We talked about a 20% rise earlier, and therefore you'll get 20% on top of the additional spend, and overall you'll still make some profit. So there's a number of factors to consider when you're looking at it. There's the intrinsic value, and then there is the financial value. And hopefully when you put those two factors together, it will tell you whether or not you should do it. And if your summary is that, yes, I would like to proceed, I think that it will add value and it will definitely add some intrinsic value. I'm going to be much happier in my home. I want to do it. I've been working on this for a number of years. I've been thinking about it. I've been planning it. I really want to do it. Then you should push ahead and do that. So once you've made the decision that you want to do the work, you've then got to think about how you're going to go about remortgaging your property. Now, as I said earlier, it's a great time to do it. Interest rates are super low, so you can get a good deal. So you've got a number of options. The first and easiest option is to talk to your existing lender. Whoever you have your mortgage with right now, go onto their website, have a look at their mortgage deals, look at the rates, see how those rates compare to your rate. Now, I didn't ask this question earlier, I have in other videos, but do you know what your current mortgage rate is? Most people don't. So you're going to have to go and dig out your form, find your deal, and look at whatever rate you're paying today, and then have a look at how that compares to the current rates. Now, it's likely, because rates are super low right now, it's likely that the rates in the market today might be lower than the rate you're currently paying. So actually remortgaging might add some value to you anyway, because if you move on to a lower rate of interest, then it will cost you less per month. So you'll be able to benefit from the current rates just by switching your existing mortgage onto a new rate. So that's great. And then when you increase the amount of your mortgage, the additional cost won't be quite as bad, because if you're paying the whole mortgage at a lower rate, then it might reduce the overall increase in that cost. So you may find that there's a benefit to remortgaging anyway if you're moving to a better rate. So have a look at your existing lender, see what they're offering. The benefit of staying with your existing lender is that you don't incur any of the legal costs of having to move to a new lender who'll need you to go through a legal process so that they can take a charge over your property. So it will save some cost, but you need to look at the rate and whether or not that rate is significantly better or worse than other rates in the market. So once you've looked at your existing lender's rate, go onto Google, type in, I'm looking for a new mortgage deal, and you will find lots of comparison websites. Go onto those comparison websites, put your details in, the amount of mortgage you're looking for, it's a remortgage, how much your house is worth, you'll need to know that. And that will throw up all of the rates. And hopefully, on that comparison website, you will find a super, super good rate. You will find a rate that is going to blow your mind, that you will think, oh my God, this is so much cheaper than I'm currently paying now. And then you need to do the calculation. So work out how much that new rate will cost you each month compared to your existing lender's rate, how much that's going to cost. Then you need to decide whether the cost saving is large enough to make the move. And generally speaking, if it is significantly lower, the rate, it will be worth moving. It's a bit of hassle. You will have to go through a slight legal process, but it's worth it. You only do this type of thing once every 5 or 10 years. So it's worth biting the bullet, going through a bit of paperwork, making sure you do everything correctly to get the best rate, because that's the rate you're going to pay for the next 5 to 30 years. So it's a really important decision. Make sure you get the best rate, get the best deal, and keep the payments as low as possible. So the next factor we need to talk about is affordability. Now, we haven't talked about this previously, but you need to make sure that you can afford the additional payments. So if you're increasing the amount of your mortgage, it's going to cost you more each month. And that is the case whether you're paying interest only or a full repayment mortgage. It will cost you more when you borrow more, and you need to make sure you can afford to make those payments. So don't take on the mortgage, don't do the work if you can't afford the additional payments. If you can afford the additional payments, that's great. And as we just discussed, if you can find a much better mortgage rate, a lower deal, then you might find that the additional cost isn't actually that great. And if you can actually find a significantly better rate, you might even be able to achieve the holy grail of remortgaging at a higher level and having lower repayments. So if the interest rate is significantly lower than you're currently paying, you might be able to borrow more and still achieve the outcome of lower monthly repayments. So that would be the perfect scenario. So really shop around, do your research, find a brilliant rate, and then lock onto it and do the deal. Move your current mortgage, increase the amount you're borrowing, and lock into that new rate. So hopefully that's given you some insight into our views as to what we think you should do. It's a great time to be borrowing money. It's a great time to be investing in property. Prices are forecast to go up. Interest rates are forecast to stay low. So the combination of those factors is really positive for you as a homeowner thinking about doing that work. Now's a really good time to remortgage. You can get a better rate, a better deal. So all of the stars are aligned. This is a good time to do it. You then have that issue of how do you find a builder and how do you go through that process? And we've got lots of videos on our channel talking about those sorts of issues. So please check them out and have a look through lots of different things that we've got posted up there. Please give us a thumbs up, one of those, and subscribe if you haven't already. Thank you for watching, and we will see you again soon. Thanks.